All the things I'm going to talk about today, we provide services in directly. So if you ever have any questions, you can get in touch. And let me talk first a little bit about residency for tax purposes. Now, has anyone moved here over the last, say, year or two to Hong Kong? Okay, so, oh, good chunk. And then the rest, let's say, prior to that. Is anyone here for a short-term period, like let's say 6 months to a year? Depending on the amount of transfer. Okay, so most of you are in a situation where you're seen or able to be seen as non-residents of Canada for tax purposes. And let me describe to you what that means. When we're looking at taxation from a Canadian perspective, Canadians are allowed to sever residency for tax purposes. And this isn't to be confused with your American friends. Americans file as residents forever because if you're a green card holder or citizen of the US, you're always required to file as a tax resident. But Canadians get the advantage of being able to be seen as non-residents for tax purposes. So unless you have Canadian source income or you move back to Canada, you won't have any ongoing filing requirements and you won't be seen as a tax resident. Now, for living in Hong Kong, it's a little bit different because there's no tax treaty between Canada and Hong Kong. So there's a tax treaty between Canada and China, but Hong Kong will never, as far as we know right now, ever be able to have a tax treaty other than with China. So what that means is when we look at residency, you're required as a Canadian tax resident, in order to sever residency, you have to meet the domestic law, which says that you have to become a non-resident by severing your residential ties. And residency is not defined in our Income Tax Act. We use a very loose interpretation of what the rule is based on these residential ties that I'm going to walk through with you right now. So there are three primary categories of ties for you that would need to be severed for you to be seen as a non-resident. There's social ties, property ties, and economic ties. Now, social ties are ties where, let's say you left a dependent or a spouse behind in Canada, that would cause you to be seen as a tax resident. And because we don't have a treaty with, Canada doesn't have a treaty with Hong Kong, you wouldn't have a treaty to default you out. So the way a treaty works is if you're seen as a resident of both countries at the same time, so when I was in Shanghai earlier last week and I was presenting to them, if they have ties in both Canada and China, the treaty has an article called Article 4 that says if you're more of a resident of one country than the other, then you can be deemed a non-resident of Canada. So if you had ties in China that were overweighing the ties you have in Canada, but you still had ties in Canada enough so that you would be seen as a resident, then the treaty would override the domestic law and you'd be seen as a non-resident. With Hong Kong, we can only look at these ties that I've listed up here. And obviously there'll be others as part of this, but if you've sufficiently severed them and you permanently live, work, sleep, eat, drink coffee here in Hong Kong, then in theory you're a resident of Hong Kong and a non-resident of Canada. However, what you don't want to do is you don't want to leave sufficient ties that I've listed here to cause yourself to be seen as a resident. So back to what I was talking about before, let's say you've got a social tie like a spouse or a dependent behind, that can cause you to be seen as a resident. And any one primary tie can cause you to be seen as a resident. The next category is economic ties. So if you've left a job available for you at home, so meaning let's say you've come down for 6 months to a year, it's hard to argue that you're a non-resident if you're not going to be gone for the foreseeable future. So we usually look at foreseeable as 2 or more years. The Canada Revenue Agency doesn't expect that you're going to know what your history will be like after the 2-year period. But between 1 and 2 years, if you know you're going to come back, it's sometimes hard to argue that you're a non-resident. If you come abroad wholeheartedly saying, I'm going to come to Hong Kong and I don't know how long I'm going to stay, then it's likely you're able to sever residency as long as you can prove that you've severed your ties sufficiently. Another common tie is leaving a vacant home available for your use. So when I say that, if you formerly were living in a home that you've then left, and it's still available for your regular use, that can cause you to be seen as a tax resident. So in order to sever the tie, you would either have to sell the home or you would have to rent it to someone not related to you at market value. And that would help you, that would allow you to be seen as a non-resident if that home wasn't available for you. Now, No one secondary tie, unlike the primary ties, can cause you to be seen as a resident. So if you came to me today and you said, I have a bank account and a credit card in Canada, you're probably not a tax resident, because that's not sufficient enough to cause you to maintain residency in Canada. If you've got a rental property here, like a place that you live, you don't have to own it. If you're renting it, you're under a long-term lease to live in that property here in Hong Kong, that's sufficient as a primary tie here. If you've got a permanent job here, if you are retired and living here, but all your ties are here in terms of social ties, economic ties, then you're a resident of Hong Kong for tax purposes and non-resident of Canada. So if you had a large group of these secondary ties, I would say that's a problem. I still recommend to anyone living in Hong Kong to try to minimize your ties to the extent possible, because what you don't want to happen is you don't want the Canada Revenue Agency to start questioning your status based on the volume of ties that you might have, even if the ties here are stronger, because you don't want to have to go through a process of having to overly explain your tax status, because that can be long and costly and timely. So you want to try to minimize all your secondary ties to the extent possible to be seen as a non-tax resident of Canada. So let's say you are a non-resident, then what happens? What do you do? So the most common area that most people make an error in is not filing what we call a final departure return. It has pretty much three names. It's either a departure return, an exit return, or a part year resident return. It's all one and the same thing. It's a final return indicating to the Canada Revenue Agency that you're no longer a resident of Canada for tax purposes. It looks like a regular return that you normally would have filed as a resident, except on the cover of the front page under the identification section, there's a question that says, did you enter or depart Canada in the year? If so, please indicate your entry date or your departure date. So let's say you departed. Once you indicate that date, there's some special things that happen in the return, and I'm going to cover a few of them right now. The very first thing is that by entering the departure date, you're going to have a proration of personal credits for the period of time you're a resident in the year. So all of you in the past, when you were filing regular resident returns, you were getting about a $10,000 personal tax credit, meaning that the first $10,000 of income that you earned was non-taxable. Well, let's say you leave on June 30th in a year, you're only going to get a portion of the personal credits. You'll get half, so you get $5,000. So anyone that filed a regular resident return and now has to amend it as a departure return, you are going to owe some more income tax. Now, why is this return important? Well, there are a lot of Canadians that live in Canada, but they don't always work in Canada, but it doesn't mean that they're not tax residents. So for example, I've got lots of clients that live in Toronto, but they fly to New York every week to work. So they'll fly out on Sunday, they come back on Thursday, and so they work in the US, but they don't live in the US. Their family, their cottage, their dog, everything's in Canada. So just because you work in another country doesn't mean you're not it doesn't mean you're a non-resident of Canada by default, and the Canada Revenue Agency doesn't necessarily know that you are not regularly residing in Canada, so you need to inform them. If you one day come back and you haven't informed them that you departed, then in their database they show all these years of tax filings as a resident and then all these blank years where you haven't done anything, and then all of a sudden you're earning income again. So you've got to match your departure date so that they know you've departed, and then you'll have an arrival date when you come back. And that'll be in an arrival return. Has anyone heard of this NR73 determination of residency form? I'll just describe it a little bit. If you go to Google right now and you type in NR73, you'll find it. And basically what it is it's a synopsis of the ties that the Canada Revenue Agency sees as significant. It's a 4-page document, and what you're able to do is if you don't know your own residency status or you can't figure it out, you can fill it out and ask the government to help you determine that. But I don't recommend you ever do that. So we recommend that you use it as a guide only, but you should be able to determine your own residency or with the help of a professional, but you shouldn't have to ask the government to, because as you can imagine, if you ask the government whether they think you're a resident, they're probably going to say, yes, we think you're a resident. So don't ask them, but use it as a guide. If you ever get questioned, if your status as a non-resident ever gets questioned, one of the first things the Canada Revenue Agency does is they send you that form and they have you fill it out and send it back to them so that they can use it as almost like a questionnaire. That's when you probably would need to seek professional advice, because you're not going to want to communicate on that form directly without help. because it is, some of the questions are rather confusing. It doesn't make a lot of sense. Some of they haven't amended the form for years, so just be careful when you're going through to just use it as a guide.